What's up, guys, and welcome to episode 2 of the 2K Robinhood Options Trading Challenge. In this series, we started a Robinhood account with 2K, and we are trying to grow the account to 3K as quickly as possible. The rules are simple: options only. That means no stock positions. And in this video, we are going to go over all the trades that were made during the week of August 8th and see how much we were able to profit this week. Before we get into all the trades, if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. This week, we started off by looking at this chart, and what we have here is Bollinger Bands around the SPY, which is the S&P 500, and then we also have an RSI, Relative Strength Index, down here, with it kind of creeping up close to 80 here, and then we have the MACD down here, which the MACD didn't really tell us a whole lot this week, but the main thing we were looking at were these Bollinger Bands. So we were starting off the week at 8.8, so right in here, and we saw that there was a lot of room to run up to the upside, but in my opinion, I thought the week was going to have more of a pullback. I thought after earnings, got more digested by the market, I thought we'd see something where the market would run down closer to this middle line and kind of bounce off of it and then maybe start making another, run up. But I was incorrect. I was incorrect in my thinking, and the trades are going to show. And also, a big mistake of mine that I forgot to make or forgot to consider was the CPI data coming out this week. So I made a couple trades right before the CPI data, and those really got me hurt. So we're going to take a look at those trades here right now, and then I do have a nice chart at the end that will show a little bit more clearly the trades that were made and how they actually, the outcome from those trades. The first trade that we made here was on August 9th. We actually made this trade for August 10th, which was when the CPI data was going to be released. I did not know that at this time, but we chose the 401 and the 400 strike. So we bought the 400, we sold the 401, and we were looking to try and collect around $7. I actually submitted the order for $7, and then it never ended up getting filled. So I stopped, resubmitted it for $6, and then ended up actually getting filled for $7, which you'll see here in a second. So here I ended up canceling the order, and I go in and I'm resubmitting it, and I'm seeing that the bid is still still 7 cents while the ask is 9. So I'm kind of sitting there wondering what's going on. So I submitted for $1 under, $6, just trying to get a fill, and then I end up getting the fill, but for $7 anyways. So there's the first trade of the week. So here is where I made my first big mistake. I saw that the market was down and I traded a put spread, which was perfectly executed. But the market was down. I did not look into the news that the CPI data was coming out the very next day, and I ended up trading a call spread. So I chose the 419, 420 spread here. And honestly, I would have been bullish on the CPI data. So I don't know why. I just wasn't paying attention to the market. Like I said, it was a busy week at work. So I ended up making this trade for $8, collected $8, and we'll see that that will come back to bite us in the end. So after making that bad trade, I actually turned around and made a couple good trades. I kind of played recovery, which you should never do, but I knew this. I made this trade and the next trade on Wednesday after the CPI data had came out, and the market had basically just gapped up a crazy amount before the market even opened. So when I saw that move, I said, okay, I got to trade a couple call spreads and try and basically pick something out of the money and be able to recover a little bit from the loss that I suffered, which you'll see at the end of the video. So I put in this QQQ trade, a call spread, and I was able to execute it for $9 and get some of the losses that we're going to see here at the end from that previous trade that we put in, because that trade basically got blown out of the water from the CPI data. So here I wanted to be very transparent with you guys. You can see the account is down massively. So this is the trade that you saw from the day before. I had to go in and close this for $54, I believe it was, that it came out to. And that just hurt a lot because that's all the gains from last video. And then basically everything we had done so far was wiped out with one trade. And again, I take full responsibility because I wasn't paying attention to the market. I wasn't paying attention to the CPI data that was coming out, and it came back to bite me. And that hurts. So it is what it is. It's only just, part of the process, and we have to, just keep moving forward through that stuff. But here you could see we actually end up getting filled for $54. So again, hurt a lot. But we immediately go back in and we're kind of looking here at what's going on in the market. So everything's gapping up like we can see there. And we say, okay, we did that trade on QQQ. That QQQ trade actually looked really bad there too, because we were down $20 on that one. It actually ends up coming back for us. And because it was a day trade, it actually ends up getting closed for around $3, I believe it was, at the end of the day. We'll see that at the very end. But we go back in and we make another call credit spread, because again, the market is shooting up like crazy. We want to get above the market because we're going to collect a lot of premium for it. So we put this call credit spread in, again, pattern day trade, because we're trying to put it in on the 10th to expire on the 10th. And we throw this order up there and end up getting filled for $8. So again, this whole week we were trying to play recovery. So here on Thursday, we ended up making another trade. We were trying to trade above the market. The market just kept rising this week. So we were looking to trade kind of against the market to collect the most amount of premium. And we saw these strikes at 430 and 431. That seemed far enough out of the money. I didn't think the market was going to make another huge move after making a huge move on Wednesday. So I went out there and I ended up getting a fill for $7, which you'll see here in a second. Here we have the final trade of the week. So this was done on Friday. Again, it was basically a day trade because we put it in to expire at the end of the day. And what I'm starting to learn and kind of feel is these are just not good trades to take because they close you out on their own. So I ended up choosing the 426, 427. I saw the market rising. I didn't think it was going to rise that high. We end up getting filled for $6, but it ends up getting closed out for a loss, which you will see here on the next slide. So here is the fill for $6. Here we have a nice little chart for you, and what you could see is we have the first week trades that we made. So during that week we made 6 trades, and you can see in total we were able to collect $29. This past week we actually made 9 trades. If you look at the trades that we actually executed on, we really only executed, you know, these 2 and then these 2 and these 2. So we again only actually traded 6 times, but we had 2 trades that were big losers, and then, or sorry, yeah, 2 trades that were big losers, and then these 2 trades down here, the $3 and the $22, they actually were executed by Robinhood on their own because they were made as day trades. So here we could see, right, this trade, it actually opened, we were able to collect $8 on, but we had to close it for $54. So on that trade alone, we had a $46 loss. Here we have QQQ, that's the trade that we made on QQQ, the call credit spread, and that one we collected $9, but we were forced to close it by Robinhood for $3, which kind of sucks because it cut down a little bit on our profit on that trade, because I do believe that actually expired out of the money. And then the final trade, which was us just playing recovery, this was kind of a stupid trade to make, was this last trade that we collected $6 on. Again, it was a day trade, and we were forced to close it at $22. I believe it's like an hour or so before the market closes on the day that you make that trade, that Robinhood closes out your trade. So in total on this week, we were able to basically lose a total of $34. So not a good week. Again, after last week we were able to collect $29. So in total we're down around $5, but that $5 that we're down is actually just the money that Robinhood allocated to us, that they gave us for Nvidia shares, if you remember from episode 1. So really we aren't down any of our own money. We just, you know, spent 2 weeks and lost Robinhood's $5 that they gave us for opening up an account. So that's kind of a recap of what happened in the market this week with the trades that we made. To close out this video, I just wanted to show you the account and where we're sitting at. So overall, we'll go to the last week. So this is what's happened over the last week. We started at around $2,035.11, and we had obviously a lot of negativity going into Wednesday as the CPI data was released. So that's really what, you know, hurt our account. We were all the way down to $1,982, and we were able to recover a little bit and kind of recover into the back half of the week. And then we made that stupid, as I talked about, recovery type of trade where we ended up losing $22. So I was feeling good throughout here, you know, that we were getting back close, and I was like, let me just try and get up to $20. So maybe we only lose like $10 on the week, and you know, that ended up screwing us in the end. So overall, we're back down, like I said, basically even. We're actually up 93 cents if you look at it from the amount of money that we put into the account, because we only funded the account with 2K. But let's just zoom out and look at the all-time. So again, all-time highs, we were able to get up to $2,037 in the 2 weeks that we've been doing this challenge so far. So hopefully next week we can get a lot of positivity again. I think the market's again kind of reaching a high. The CPI data kind of screwed us. I think what we'll see on Monday, if the market kind of runs up, I might try and do a day trade just if I'm feeling confident, but I think I'm going to let the market run a little bit further, because I tried making my trade a little early in the day. I wanted the market to get a little bit more established, so maybe around 10 to 12 o'clock make a trade in there for the rest of the day. Otherwise, I don't think there's a point in being, you know, too aggressive. Let me try and take my time, play a few trades that are a little bit longer term. Maybe play something that's Friday, all the way out on Friday on Monday, and you know, see what we can do there. So trying a few different things, and we'll see what happens this week. So stay tuned. I appreciate you watching the video. If you liked the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.